What's going on, everybody? Chef here. Welcome back to the channel. AMC up 20% today. Want to talk about a couple things that I saw not only inside this stock today, a couple differences from the previous run-ups, although obviously this video is very premature as it just had a massive pop as of today, and also just the entire market. Okay, so let's get right into it. First off, AMC, I checked to see if there was some news that was released right around this 1:30 Eastern time frame. This article came out about 40 minutes prior. Okay, obviously talking a little bit about Avatar. Adam Aaron states, saying that it's a bull signal for AMC stock. Obviously, Adam Aaron has done everything he can verbally when it comes to trying to defend AMC stock price and obviously get the shorts off of their back. But clearly, we saw a massive volume come up here, got to this $6 mark. And it's really ironic because every single time you've seen AMC pop, it really tends to kind of just fade. As of lately, obviously, over the past probably year, it tends to kind of fade off, throughout the end of the day. A lot of your traders, your professional traders will get kind of, shaken away from, AMC because market makers are very prone to letting this get to a point where it's just at that, that halt threshold, obviously halting the stock, bringing it down, and then shorts will continue to pile on. And it made through the entire day a move all the way up from 530 to about, its high of 617 without having a halt. I was saying to everybody inside of the group, it's only a matter of time, especially the way we were pushing that volume coming in. Those massive, this is on the 3-minute chart, those massive 3-minute candles, over 1 million shares traded in that time frame, just waiting for it to get to that point, and obviously, having the circuit breakers halt and then eventually bring it back down. We also saw this support right here. Once it broke above this flag about that 590, and it kind of failed that right here. You can tell, I'm sure a lot of retail shorts had piled in on this and really didn't expect it to kind of rip back up at the end of the day, just because it's not the normal trading pattern when it comes to AMC. Okay, so it is a little bit of an anomaly. When you do look at this from a little bit of a larger time frame, it's definitely a bigger breakout. Getting over some of those levels, over the $5 level was key. We based above it, and once again over the $6 level. Now, a couple of things I do want to mention. There is a lot of call activity, especially for the monthly expiration. There was a lot of action on this chain, even dating all the way back to probably close to the last 6 to 8 months. Okay, so obviously there is still a ton of out of the money calls, especially the deeper you go down the chain. But still, there was a lot of call buying happening, really leading to some of that gamma ramp coming into this. But let's not only talk about AMC, because it's good to get a bigger picture of the entire market. Now, I've been saying for quite some time that when it comes to market structure, high growth is always the first one to fall. Okay, and it's also the first one to cover. The reason being for that is obviously, you have these companies that are based off of future valuation. They're traded off of speculation, such as high short interest, which obviously AMC was, and going after that monstrous short squeeze. It's very lucrative for your bigger funds, your institutions, to switch away from those plays and go into more of your blue chips, your safers, your cyclical stocks, your consumer staples, and so forth. And we watched that happen all throughout 2022. Okay, and a lot of just selling, getting away from that margin, and so forth. However, high growth is technically one of the first sectors to really where you see that inflow of money start to come back in. These stocks have just been beaten down for so long. Okay, and they offer a little bit more of a better opportunity when you're looking at your blue chips, such as Apple, that is still kind of holding up very relatively strong throughout the entire market, and so forth. And that's what we saw today. And just looking at a couple stocks on my watch list that I look at every single day, you look at Roblox, that has had a massive move all the way off that 25 over the past few days. I mean, Coinbase is the same thing. It's up almost 100% off of its lows really since the start of the year. And among a few other ones, you take a look at ARK, which clearly does struggle. Kathy Wood is having a very hard time, obviously, much different than going back from 2020, but off of that 29.40 level all the way back to over $37. And you're seeing a lot of action happening on this high growth, and therefore AMC is clearly participating in this. You see the solid uptrend, as you can clearly see. And we're going to look for that 2 continue. Okay. Now there's a couple things I will, mention. That one, as much as I don't want to say this, and there obviously are naysayers to this, the truth of the matter is there's a lot of, retail traders, your professional traders, people that are not involved in this movement and really don't care about AMC or any, of the other aspects involved in this, that are waiting to short this. And, when you look at this play from a larger time frame, I'll scroll out just to the 180-day for you guys. You see every single one of these pops. It's a very good opportunity for these shorts to pile on. Okay, and we've seen that every single time. They wait for that flag to kind of break, a little bit of break of support. They pile on and begin to ride it back down. A lot of them aren't going to hold too long just because where it's trading at, the downside opportunity isn't there for it. But they're always waiting for it. You get the sentiment for it. You can see it. You can see some of these small orders in the tape rolling through. These really aren't institutions, and you're starting to see some of that retail. Well, here's the thing. Retail has a much smaller threshold, okay, than some of these institutions. And when you're seeing some of this price action happen, especially as we did just today, just to see that this fail right here of this flag bring us back down, especially once you got below that 590 and it immediately bounced up and hammered through this. And here we are starting to push a little bit in the after hours. Obviously, it's very early as I'm making this video. That's already a signal that, wait a minute, we are already seeing a little bit of a trip up when it comes to the smaller, the retail side, okay? Now, the retail professional traders, like I just spoke about, those are the ones that are going to start to bring the price down, obviously, when the volume is very low. All right. It's going to be the institutions that will obviously, pull their manipulation when it comes to the options chain, as well as in the dark pools. But the retail is the first one to start to trip over their feet. Okay. So keep an eye on that for going forward. Like I said, it really needs to start to clear some of these $8 levels that I mentioned, especially, all the way back in November. Clear those $8 levels to get some momentum continuing to move to the downside. Now, out of a broader picture, okay, like I mentioned earlier in this video, you still see the market structure of, of SPY, obviously the entire market. This is nothing but a bear market rally until it is not. Okay. And clearly, once the market starts to find some heavy resistance, we rejected off that $400 level off of open as of today. Once it starts to hit some resistance, obviously your high growth is going to pull with it. Okay, so we do need the entire market to continue to move to the upside. Now, while the entire sentiment is very, very bearish, okay, on the entire market, and everybody is just waiting for this imminent monster crash. I've been saying this since, all the way back in probably 2021, early 2021, when I started making videos. When one side is heavily crowded, when everybody, their brother, their mother, their sister, is waiting for this, event to happen, that's when market makers will continue to draw this out, or potentially it won't even happen at all. Now, while there is a whole lot of evidence on the macro side, okay, that we are going to continue to move lower, like I said, it's really up to the market makers until we eventually make that move down. We do have a little bit of economic data happening, especially the producer price index, which could give us a little bit of a shakeup, especially we have the Fed meeting coming up in just a couple of weeks, as well as the first CPI print that is going to be calculated a little bit differently. It's going off of a 1-year basis instead of a 2-year basis. So that'll be very, very interesting to see. But all in all, solid move today. Obviously, we have a lot of ground to continue to make up to actually where we were. But like I said, it all starts with that little bit of tripping over their feet. They get a little bit stumbled. They choose to exit their positions, potentially wait for a higher one. And that's when, momentum continues to pile into it. All right. Inevitably, guys, one thing we do want to stay away from is seeing these halts, because it tends to, every single time these halts happen, I obviously, there's a whole bunch of different, opinions on, circuit breaker halts and so forth, but it's just a red flag. When small caps were running hard, they were running hot. I mean, when you would see some of these, these halts, happen, the first halt happen, you would want to jump in right after it, wait for a little bit of pullback, jump in right after it. And, there's like a 90% chance we'd make a higher high. We are not in that market. And unfortunately with AMC, a lot of these professional traders have seen, the manipulation. So if we can continue to stay away from the halts, we got a, bigger chance to move higher, especially in the short term. So guys, that's it for this video. I'll see you in the next one.